All right, so welcome back to the channel. I just want to thank everyone for helping the channel. We're almost at 300 subscribers, so that's a huge accomplishment to me. I started making these videos really just kind of sharing my own experiences, almost kind of allowing me to teach what I've learned so I can better learn what I've learned. But um, for everyone that's been watching the videos, commenting, following the Instagram, just thank you a lot. And if you are not yet subscribed and you do enjoy my videos, one of the easiest ways you can help the channel is by hitting that subscribe button. So with that, I'm going to go ahead and get started with today's video. And today I'm going to talk about how prop firms have helped me to regain my confidence with trading my own personal account. So if you're a trader, you've lost probably some money with trying to learn how to trade or becoming a trader. And one thing I've always, when I learned about prop firms, the idea that I can trade and make money if I'm good, but not lose money if I'm bad, or not lose too much money if I'm bad. I like the idea of that because it felt like it was an opportunity. Um, so it is an opportunity. Like trading for prop firms is a huge opportunity, and also there's like rules and things they have in place that I believe actually does help you to become a better trader. So I'm gonna get started with one of the first things that I think made a huge difference for me in my ability to trade, and that's risk management. So prop firms, they deal with thousands of traders. So when they're making their rules and policies for who would qualify for a pro account or funded account, they're considering their own risk as a prop firm. And they're basically passing on a lot of these parameters onto you, the trader. And they do, each prop firm has their own rules. And a lot of times these rules appear arbitrary and they're arduous. But over time, I can honestly say that these rules have helped me to improve my ability to be aware of and manage my risk over time. So with prop firms, they give you the ability to trade large lot sizes, and they give you a lot of freedom really to really do what you want to do. But by trading, on a eval account, you get to basically see in real time how that strategy would work in the real market. And with the prop account, you live and die by the drawdown. So if you hit your drawdown, that's it. It's over. So being able to trade with that in mind, like having this idea that there's a set amount of money that I'm allowed to lose. It's a big contrast from trading your own personal account when it's all based on your feelings. So, one day, you lose $800. Okay. Next day, you lose $3,000. In your own personal account, a lot of times it feels unstructured. Like you're just kind of doing what you feel like and going off a hunch or hope. And I think having an experience trading with a prop account, it kind of really sets into you this idea of discipline of like, okay, I shouldn't lose more than this much money either on a daily basis or period ever. And you really trade better, I think, by just having this kind of idea of, okay, no, there's a certain amount of money I'm willing to risk, and here's how I'm willing to risk it, and here's how I'm not willing to risk it, and then here's when I'm willing to exit a trade. It just made, I think it made a huge difference for me in trading, and I've seen an improvement in my ability as a trader. Number one. Number two, with prop firms, they give you the option to trade large lot sizes. Um, Position size is big enough for where like you can make a pretty big dent in your account if you're wrong, or you can make a lot of money if you're right. So the thing is, with the prop firms, even though you're trading large lot sizes, you're trading with a small drawdown still. So even though you can trade 12 minis, your drawdown's $2,000, right? So if you're talking about, let's say the ES, and you're trading, let's say 10 contracts, that means each point on the ES is $500. Or no, yeah, $500. So if your drawdown say $2,500, that's 5 points, and your account's either blown up or you made a profit of. So being able to really have the ability to trade large and not trade large is actually a skill that you should learn. I think by just having it available to you and then having experience trying to scale up and seeing the results of scaling up with your strategy, I think it helps you for when you're trading your own money, and then you really are able to decipher which opportunities or which conditions it makes sense to scale up in, and then which opportunities and conditions maybe it doesn't make sense to scale up in. I know with my strategy, I recently I used to have the strategy of where I would double my position size if it went up a certain amount. And recently I said, well, what if I reduce the amount it goes up for me to double my position size? And I saw in real time why that's not a good idea, right? But I'm glad I tested it with a prop account versus my own account, because then I would have lost real money. It's kind of even helped me to gauge, okay, you know what, maybe I can double my position size or add to my position here versus, doing it, like, but yeah, that's my personal experience. Second, I think it forces you to develop a system for determining your lot size. So prop firms offer various account sizes. You can go from anywhere from a $10,000 account to I've seen $300,000 accounts. So you're then forced to say, okay, well, with this account size, what's an appropriate lot size for my trades? And even like I have developed systems to help me determine that. Now, like, yes, sometimes you do want to just kind of go off what you feel comfortable doing. But for me, I have a system where like I base it off the drawdown and the profit target and amongst other things. And they allow you again like to scale up your strategy with relatively low drawdown to test strategies while capping your loss. So like, let's say you blow up a prop account, you probably didn't lose that much money, or you wouldn't lose as much money as you would have lost if you had done it with your own personal account. For me, trading with prop firm has allowed me to develop my edge. As a prop trader, there's really no point in using a prop firm long term without an edge or an advantage. So I believe that the point of a prop firm really is to help you. It's kind of like a playground, or like to like really learn and hone your skill. And prop firms can help you develop your edge for less money than you could possibly lose trading your own account. So you're able to trade what you think you'll be trading in your personal account just to see, what's the outcome going to be. And the difference between doing it this way versus trading like a sim account or paper trading is that there's actually a window or an opportunity for you to earn real money from your trading. So it's not just entirely, theoretical or practicing. It's really like you have the ability to make money and your losses are capped. So I think that's just a fantastic opportunity. And I want to say though, prop firms may or may not be for everyone. So I would say you should use a prop firm if you're trading to find or test your strategy. You spend a lot in commissions. So when you get a prop firm account, sometimes you can get an account for a couple $100 or even less than that. So if you look at your own personal trading account and you're spending, let's say, $800 a month in commissions or a week in commissions, you might, want to consider a prop account, because if you pay like the fee to, trade up on a prop account, you could still trade what you would trade in your own account, and the commissions are kind of built in. So the commissions are coming from your account balance. So in a way, I kind of feel like you can justify using a prop firm, because if you pay more in commissions on your own account, then you could probably rationalize getting a prop account. That's me. That's how I could look at it sometimes. You should definitely trade prop firms if you have a strategy, if you have an edge, and you need leverage. You want to trade bigger, but you don't have the capital, then yeah, prop firm could definitely help you. And then the biggest reason to use a prop firm is if you'd like to cap your loss. And this is a major one. A lot of people lose a lot of money trying to trade or learning how to trade. So, you might still lose some money on resets and, eval fees with prop accounts, but I still think for most people, you'll probably lose less money on prop accounts than you could lose with your own money. You know, that's if you don't know how to trade. Do not use prop firms if you are regularly resetting. So if you're always resetting and you never pass an evaluation or you never make a withdrawal, um, that means you probably don't have an edge or you don't have a strategy or a good strategy. And you should probably go back to the drawing board and reevaluate, right? Find a strategy first and then come test your strategy in a prop firm, in a prop account. Um, if you're not seeing any improvement in your trading and you don't understand what you're doing wrong, then I 100% think you should take a break from prop accounts. If you're not passing any of your evaluations, if you're not withdrawing, you should probably take a break from prop accounts. And if you're saying, well, how do I practice without risk of loss? You can actually do something called paper trading. And with paper trading, you can basically buy like a sim account. Tradovate offers it. I think NinjaTrader offers it. Um, TD Thinkorswim offers it. So with paper trading, you can basically tell them the account size you want to start with, and you can trade it with the same exact rules as your prop firm because your prop firm has you actually trading in a sim account anyway. So that's all they're. It's the same. It's the same sim account you're trading. So you can get that for like maybe 10, $12 a month with Tradovate. So, and if you blow up your demo account or your sim account, you can always reset it for free. You can literally go in your account and say, change my account balance back to this amount of money, and you can start all over again. And I think that's a great way to build your strategy. And then once you feel like you have it figured out, then you come back to your prop firm and then try it out. But that's a really low cost way to test your strategy out, and I think it builds your confidence too, like just being able to risk free trade. I think this works best if you're trading how you actually would if there was money on the line. So when people go into sim accounts or demo accounts, I've seen people take risks they would never take in their real account. That's not realistic. That's just gambling, right? That's you going there and making a big bet on red. It might work, it might not work, but if you want to really grow from trading a sim account or even a prop account, you need to trade as if you trade in real life, and not the idea that, well, I can't lose any money for real, so I can just bet it all on something stupid or go along with 20 micros or 20 minis. Just because you can do it doesn't mean you should. So in summary, I would say if you're able to pass a prop firm evaluation and do well as a prop trader, you should definitely consider trading a personal account. And with prop firms, a lot of people make their decision on which prop firm they're going to get based on things like days to withdraw or just other rules like drawdowns and things like that, or like end of day drawdown versus trailing intraday drawdown. But with the personal account, you can really withdraw whenever you want, right? Like, and you could fund your account with, so like let's say you're gonna get a prop account with a $1,000 drawdown. You can fund your own account with $1,000 and trade as if you would with that prop account, and you can you could really trade the same way. So for me, I think it makes sense for me to trade. I have a personal account and I have multiple prop accounts, but I like the idea that I have my own personal account where I make the rules, I make the risk parameters, I control all of it. So I like that, and you do have the ability with Tradovate to really create a lot of the parameters, like whether it's position sizes or the daily drawdown limits. You can set all that up yourself in your own personal Tradovate account, which is great. So I like that. with personal accounts, you also get a demo account, at least with Tradovate. With Tradovate, if you have a funded personal account, like where you're funding yourself, they throw in like a demo account free of charge. And I think it's great for you to, hone your skills and try ideas out without risking your own capital. So for me personally, trading prop firms made me realize like, wow, you know what? I should go back to trading my own account, like as well as trading prop, because for a while I was doing only prop accounts, and now I'm at the point where I feel like I'm gonna start also trading about my own personal account. Even though there's more risk than a prop account because I can lose my own money in real life, but I think there's plenty of upside, and I feel like my strategy is at a point where I feel confident in it and trading it my own money. So thanks for watching the video again, and if you're not subscribed, please subscribe. And if you are subscribed, thank you. You can follow the Twitter and Instagram to keep up with the account. And if you guys have any questions or videos you want me to make, just please leave it in the comments, and I will try my best to create it.